It's the pre-market ritual you never knew you needed. Get ready to Gap and Go with the Calum Trading Institute.
Guys, welcome to another episode of Gap and Go. A lot of things to unpack over the last 2 weeks. Obviously, coming from the trade war, we've seen recession fears. Are we in a recession? To seeing your bond yields drop 40, 50 basis points and rally all the way into 4.5, 4.6% on the Treasury. Many things happening over the last 2 weeks. So much volatility, a lot of things to unpack. From the reasons, and maybe we can start from the bond yields, and maybe Jason can share first. We've been hearing so many things about probable reasons as to why we're seeing so much volatility. You've seen unwinding on the basis trades, selling by China, Europe, Japan. And this morning, while listening to the All-In podcast, they were talking about a Japanese hedge fund that actually blew up. And that's the main reason why you're seeing so much unwinding happen on the TLT. And the volume of the 10-year Treasury being at its highest over, I don't know, last 3 years maybe. Jason, maybe you can share your thoughts first.
Wow. Okay, where do we even begin? I think like every time there's a low period of volatility and then volatility spikes, I think we're gonna see a lot of this, things blowing up in the markets. But anyway, I think what happened recently is going to be written in the history books for sure, several chapters. Diba? So where do we even begin? I think like diba, a few weeks ago, diba, like we keep on mentioning this US exceptionalism, diba? Okay, and I think that a big part of that is globalization. Diba? I think that's a good place to start. Diba? So because of this global cooperation, diba, where the US is the biggest consumer, the biggest importer, diba, actually everyone benefited. Diba? So like US companies had a global market, margins went up, a lot of jobs created all over the world, especially China. Diba? And actually what happened was the US, when people earn money through imports, to exports to the US, they recycle it to the US market, buying my bonds and stocks. Diba? So it's everyone wins as long as you cooperate, right? Diba? And actually the ones who designed this globalization is really to prevent wars. Actually sa totoo lang. Because you need to cooperate with your neighbors, right? And I guess that's why what happened recently is so important, diba? So like TLDR, diba? Like the average tariff of the US imports went up from like 2.4% to like close to 30%. Diba? So yes, Trump walked back from the global, making it global, diba? 10% na lang yung reciprocal tariffs. But the China tariffs are still there. It's huge, right? Yun nga, parang if you compute it, it's like average 30%, all the imports going to the US. And I don't think it's that easy to walk that back. Diba? Because it's gonna fund the tax cut. Diba? So no tariffs means no tax cuts. Diba? And I guess that's why the center of focus is really the bond market. Diba? Because all of these policies have a huge impact. Right? Some people are talking about, okay, this is bound to go to recessions because of the tariffs. Diba? But some are saying that, okay, there could be like an inflation spike first in the short term because of, increase in costs because of the tariffs. And that's why I guess we're seeing this huge volatility in the bond market. Diba? And you're also seeing all these trades that actually benefit from low volatility are exploding right now.
Brian, maybe you can share first before I, talk more. I'll be talking a lot. That's right.
I mean,
Sorry.
go.
I'm gonna ask you, Brian.
I don't know.
Some people go ahead because I'll be talking for a bit. So
Yeah. Adding to what Jason said, if you look at we're trying to figure out the method to the madness, diba? So really happening? If you look at the paper America first policy that they're proposing, part of it is really closing the financial assets window, US dollar financial asset window from foreigners. That's part of it. That's the plan. Meaning they're going to increase the cost of carry of, let's say you're a foreigner, you're going to buy financial assets. They plan to increase the cost of carry of investing in the US. That's part of the America First policy. So from what Jason said, through globalization, recycling of, so China, manufacturing center, recycling of dollars, when in the past they used to buy financial assets, diba? It was open, financial asset. This time around, it seems like the Trump administration want to close it. So rather than buying financial assets like bonds and equities, they want you to invest in factories, diba? In goods. So even gold is appreciating because of that. So I think that's the new thing nowadays. That's the new thing that's happening. And with the volatility that all their narrative and all Trump's tweets are causing, it really makes investing in these even in stocks, very unattractive, and they really want investors to push investing in factories in the US. I think that's the main goal. So it's the main, ang sabi nila, it's the Main Street's turn versus the Wall Street. And when you talk about the heydays of Wall Street, strong dollar, strong dollar, very active US Treasury market. Diba? Yan yung mga, tapos strong stock market. This time around, baligtad siya. So they're really pushing for very low interest rates for the Main Street. Yeah, covering everything.
Basically, just globalization benefited them a lot, but it also caused a lot of distortions, diba?
Oh.
Like, okay, you don't manufacture anything anymore. You left behind the middle class. Yung mga like real wages haven't really gone up for the past 40 years in the US. Diba? So parang may naiiwan talaga. Diba? And I guess parang, yeah, fixing a lot of the imbalances. Diba?
Yeah, and I agree 100% with everything that's being talked about right now. Let's just stick to the real goal out of all of these things. It's just China is, like I talked about this at the symposium, China doesn't just produce rice and clothes anymore. Now they're producing all these high value items. Now, everything now is becoming a national security because in terms of technology and innovation, parang natatreta ng USA. And that's as simple as what we're seeing today, right? And so whenever we're seeing these things, especially in transfer of superpower, there's always that strife, and that's always that conflict that happens between those two countries. And these are exactly what's being played out today. So everything that the US is trying to do is like what Jason talked about, try to make America great again. And that US exceptionalism is no exception, right? The thing is, most of these factories, nobody wants to do it anyway, right? So you can talk about the three main ones, semiconductor, pharmaceutical, and energy. That's really the three main ones I'd probably say in the US right now that they're trying to bring back home, right? So that supply chain end. Right? So what happens is now they're attacking everybody, doing it harsh for it and then retracting. But I guess the real goal is really trying to get everybody's attention and say, hey, open up factories back into the US. Right? We can show some charts. We'll show charts in a bit. Siguro the one thing that's benefiting maybe so far is now, I think NVIDIA announced today that they're actually producing chips, their Blackwell chips now from Arizona plant, care of TSMC. All right, so I guess that's the first step of national security that they're trying to do back. But yeah, let's get straight into it. And I want to show this part here. So first thing is huge volatility coming from the 10-year treasury. I think this is what everybody is watching out for that even President Donald Trump retracted because when he saw this spike in volatility with regards to the bond market, sabi niya, teka, sige, delay muna natin yung tariffs. So obviously it's the credit market that everybody's watching. And trying to, like what we talked about before, Doge, cut spending, cut deficit, and really to make it long-term sustainable, you need to bring interest rates down because of the refinancing. And I think that has been clear, right? Concerns about the basis trade has been being played out. I don't know. I think we'll probably find out the reason maybe 90 days after the reporting is done. But as of what we're seeing today, with all this volatility, I think the assumption being made here is even though you might see inflation spike up in the short term because of the tariffs coming from China, and even in supply chain issues because people are front loading supply chain already today, concerns about the economic slowdown are actually much greater in terms of noise today. So I think post 1 year, maybe you might see inflation spike. Actually, there are some data coming out that you're probably seeing like a 0.4 to 0.6% spike in inflation. And then after it might start coming down once again because there's really a slowdown that's happening. So hopefully this thing plays out because out of all the asset classes, after this part here coming from the equity market, you see this loss of wealth that happened over this last month and a half. It takes time for this to unwind, right? And even let's say corporate presidents, Walmart cut guidance, meaning they stop giving out guidance because they don't know all the uncertainty. And all the big boys, Unilever, P&G, now are reevaluating most of the CapEx spending that they're going to be doing. I think it will just exacerbate the slowdown that we're going to be seeing. And people are waiting for more clarity because in all this uncertainty, this is the last thing that you want to be spending in, right? So at the end of the day, cash is king in this environment. So I think that everybody's just playing the balance sheet, covering their balance sheet, making them strong enough to sustain any volatility that will happen in the short term. So I don't know if I missed anything, but anything to add on the macro before we start looking at individual sectors and stocks?
Well, to me, I think it's 100% clear that, we're really headed into a slowdown. I mean, just look at all the rules coming out left and right, diba? I mean, nobody can make a decision. I mean, actually, funny, like, okay, you build a factory in the US, where will you source the components? The input for all the factories. Okay, you want to build the chip, okay, there's like 1 million parts there coming from all over the world. Tapos palipat-lipat ng border yan to get to the finished good So parang magiging multiple tariffs yun, patong-patong, di ba? So parang really in this huge environment of uncertainty, I think CapEx is gonna collapse. People are gonna wait and see. Di ba? Tapos, okay, everything gets more expensive. Of course, you save money. Di ba?
And let's be honest, right? US is playing a 4-year game because every administration is 4 years.
Yeah.
China is playing a 30-year game. Thinking about long-term sustainability, where am I going to source all these raw materials, right? Playing any innovation for 30 years period versus 4 years for the US.
Yeah, I mean, everyone can just wait it out, right?
Yeah.
So
Price action wise, if you're looking at the S&P, so you're based on our framework, so it's in a declining phase. The equilibrium, if it's a declining phase, the equilibrium line is a downtrend line. So most of the time, from oversold condition, it rallies towards that downtrend line. So it corrects a oversold condition, but in a longer, let's say in the intermediate term, yeah, the slope is downwards.
rally mode.
Yeah, rally mode. Every rally, as soon as it touches that line, downtrend line, the action is actually to short it. MACD wise, it can remain oversold for a very long time until, if you think about it, the end game really is like 3 to 6 months from now. What would the earnings picture be? So if you're talking about PE ratios today are reasonable, maybe if you cut down the E, the next 3 months, diba? Next 3 to 6 months, with your capex going down and everything, diba? Demand going down, guidance going down.
Yeah. I think
You might see the PE blow up. So it's actually similar to what happened in the tech bubble where prices accelerated downwards as soon as the earnings came out, the multiples came. So may extra irrational selling.
I think also, diba, like we mentioned in the Calum yung symposium, diba? Okay, this PE makes sense, but it's based on actually high expectations, eh. Especially the Mag 7, diba? Like 18%, diba? So of course, like the past few years, they've been defying this high expectations, diba? But with what's happening recently, I don't know. Diba? Kasi actually, if you look at this Mag 7, I actually think they're vulnerable.
Oh.
Given that actually the US has a service surplus to the world of 280 billion. Never gets mentioned, of course. Services surplus at 280 billion.
Yep.
I think that's largely because of Mag 7. And it makes sense. Kasi if you look at the revenues of Mag 7, actually more than half of it is global, eh. Diba? So that's why I think, okay, with the global economy like slowing down from all this potential retaliation, of everyone else, making it tougher for the Mag 7. Diba? So yeah, parang okay, I'm a bit concerned about
Yeah. If it's tougher for the Mag 7, I think it would be tougher for those informed spec.
Exactly.
Especially as soon as this rally finishes. I suggest to all those traders to really short the relatively weak ones. I think as soon as the index goes back to equilibrium, the easiest short are the weakest ones.
Actually, if you look at Microsoft, for example, parang kasi I think may distribution pattern, eh, right? So like entire 2024 going 25 down sideways, giant pattern and breakdown. So parang I think it's a little top heavy, diba?
Let's be honest also, all the overweight positioning is happening. Sorry, overweight positioning of most funds are always in the Mag 7, right? And rightfully so, like what we talked about.
Yeah.
A lot of these individuals, let's say like Google, I think last week still made an announcement, we're still spending $75 billion in CapEx. We're not changing that. I think they made clear on that end. So maybe, you might have this slowdown and this de-rating that happens might cut down expectations and lower down expectations significantly, which is good for the long run. And if you look at it from a business perspective, I'd probably say like the Mag 7 is probably least vulnerable to what's happening today. But at the same time, I also agree with Jason because everybody's here, top heavy, right? If you're investing, whether you're Japanese or you're a foreign institution, you probably say like, what, 35% of all your indexing is in the Mag 7. And I guess that's the part that's being vulnerable today because you're just seeing excesses that are just being evaporated from the market.
Yeah, I think you have this heavy concentration of everyone on the Mag 7. Diba? And like what we mentioned the past many, many years, diba? US exceptionalism, strong dollar. Diba? Actually, like if you look at foreign holdings of US stocks, 18.5 trillion. I mean, it's a lot higher than just 5 or 10 years ago. As in, a lot higher. Diba? I think bonds, 8.5 trillion. Okay, and now you're, waging this trade wars that's affecting actually the dollar income of everyone. So parang okay, to raise liquidity, they might be, forced to sell, right? And of course, they won't sell everything, just saying that, that could be a factor, diba?
Yeah, true.
Okay, let's
Even
really quick and head into emerging market. I'll just ask one question to you guys because right now the TLT is acting in a period of uncertainty. That's the reason why we're seeing so much volatility. Is this an opportunity or is this you might see more setting first before it bounces? Well, anyway, I just want to get your thoughts on it.
Ako, Honestly, I think we will see a lot more volatility. I think the tariff shock thing applies in yan. I mean, I don't think there's any news that will come out na, can make it a bigger surprise than what it already is. But I think yung next up naman is yung tax cuts. That's the huge thing that's coming out next. And I think it could be as impactful as the tariffs. Diba? But once we see all that come out, yung tingin ko, baka pwede na TLT.
Yeah. Essentially, if this bond market goes up, that means the market agrees to the long-term plan of the administration. Diba? But so far, medyo yung volatility that's happening now, parang there's still, parang malayo pa eh. You can still see light at the end of the tunnel. Parang malayo pa talaga. And again, as what I mentioned a while ago, yung America First policy, they're planning to close this window. So making it hard for foreigners to buy into it eventually. So although they plan to have this parang lower yield, diba? Yung 3% yield, yung 333 plan nila, I think it's going to be a challenge talaga. And I think before it happens, you have to see your US dollar really mark down some more before. And also an action by Powell. I think he's the last piece. Everything that Trump and Bessent are doing, so it's really trying to force the hand of the Fed to take action. I think until that happens. So when Powell sees that he needs to cut, it's the only time that this bond market will experience a preview or bounce.
Okay, that's the thing. Because this has been a fight and a big reversal in roles. While US is fighting everybody and all its friends and friends, enemies, and frenemies, China is visiting the rest of the world and saying, "Hey, I'm your friend.
We're open.
We're open."
We're open.
Spain, France, doing his Asia tour right now. I think he's in Vietnam as we speak. Any thoughts on Hong Kong or China? And
I think parang first time din nagkaroon ng trade talks yung Japan and China, right? And Korea and China. Diba? So parang I guess everyone's creating a plan B already, for a US that's less open, right?
Parang US pa yung may Great Wall.
Oh,
It feels like that. Siya pa yung may Great Wall this time.
well, I think for the world, especially for near the axis of China, if you're near the axis of China, of course I think you're very vulnerable right now, diba? I mean, world of uncertainty, right? Well, I think long term, I think it's good, right? I mean, at least you're diversifying your sources of exports and stuff, right? Closer integration to your neighbors, everyone else. Less dependence on the US and the dollar, right? So parang it's a slow rewiring of the global financial system, right? Diba?
Yeah.
Well, this is the biggest question mark, right? Do we start investing into Hong Kong and China? I think I've gotten this question several times, right? Because we're seeing this rotation out of US equities because they're still expensive into China and Hong Kong because valuations, even prior to the drop, were actually still, you could say, cheap, diba? And this drop just makes it cheaper, but you're also suffering from many uncertainty. So I guess the point being here is, do we buy it or do we wait for it? Or what's the objective here? Will we still see continuous rotation out of developed markets? Sorry, not developed markets, out of US into the rest of the world. Shouldn't this dollar expedite that? I think these are questions being faced today by funds and institutions.
Yeah, I think so. The potential dollar weakness is really catalyst for some to really move their investments out of the US. I think this rally is really a chance for the big ones to really parang chance to sell siya for most habang hindi pa lumalabas yung earnings
And so we talked about energy, we talked about national security, we talked about raw materials, right? Sourcing for the US, right? But US has never taken a point. You can talk about the Panama Canal using BlackRock. But in terms of real direct investments, even in the Philippines, we're one of the closest partners of the US. I don't want to criticize, but have we seen any foreign direct investments that have flowed into the country? To be fair, they've done an excellent job providing us with BPO of W remittances and export services. So I'm very thankful on that end. But in terms of FDI, you rarely see them come into a country, throw out billions of dollars of money while China is slowly conquering the world, putting more money to Africa.
Yeah.
All the
BRICS.
minerals, magiging Chinese company na lahat sa Africa eh. Diba? So I think that's the, tale of two stories, right? One is trying to come in, provide influence, pero ikaw na bahala. You do it on your own, right? The other one is actually providing resources.
Yeah, glaring difference, well, based on their positioning kasi the Chinese may pera sila. Ano sila, creditor sila. They have this 1 trillion surplus that they can afford to do all these things. On the other hand, your US really just wants to attract buyers for their treasuries, diba? For their debt. And in exchange for what? Influence, as you said, influence and protection, defense. Very glaring difference. So I think the Trump administration is really trying to reverse it or at least correct it in a way. If you see the results of the latest deficit, from 300 billion last year yata, it went down to 100 billion na lang. So all because of Doge. So may konting improvement in that part from the numbers that are coming. But it's going to be a slow one. Talagang matagal before it really changes. Changes in a way similar to the surplus economy of China.
Okay, let's do this really quick. Last but not the least, Philippines, because it seems like, well, it's not shown here, but the last 2 weeks we've seen a huge drop in the US. Philippines, one drop, rallied all the way.
Depressing.
We're not affected because
Seriously, the past decade, it has always been a non-recessionary sell-off below the 200-day EMA. So everything is all about parang market events, driven by market events outside the Philippines. What's depressing is nag-bull market na yung US, nag-bear market, nandun pa rin tayo.
what's really supporting the markets today is cash dividend, share buybacks. SM, the share buybacks look like it's working. Ali, aggressive share buybacks. Even your property sector, you're seeing aggressive share buybacks. In terms of cash dividend, even your consumer companies, I think Keeper announced a 4.5, if I'm not mistaken. Pure Gold, another 6% cash dividend. Business up 20% in full year last year results. Great earnings by Pure Gold. So you're seeing a recovery, especially in fourth quarter earnings. First quarter, second quarter looks like it's a continuation of that because of election spending next month, which should be good. But the thing is, will we really see a decouple happen? Will this rally while the weakness in the US still persists? That's the $1 billion question.
Based on the bond market, we are not decoupling. Yung bond yield,
Well,
bond
I
yield.
think that you have to separate this syempre always the economy and the capital market, eh, diba?
Ah,
So I think all that's happened is good for the Philippine economy. I mean, we're not affected by the trade war. You have the dollar going down, di ba?
oil.
Nakapag-rate cut na yung BSP, di ba? So commodities are going, oil, huge breakdown in oil. Di ba? So all of those things are good for the Philippine economy. But I think for the capital markets, I mean, if you look at US where it is at the cycle, diba? It's like it looks like it's stopping. Dollar is down, bonds and stocks are all down. So I think that's not a good mix. Definitely, we're still in this risk-off environment. Asia, I think for now with the tariffs and all, no-fly zone, right? It's kind of hard for me to see the market decoupling, diba?
Yeah,
But
I
at least
agree.
you know.
I think we're just going to see more emerging markets start cutting interest rates. Singapore
Yeah.
did it yesterday. Um, Philippines, rest of emerging market now have room to cut because of the strength in their own local currency, which makes it actually a good time for all of them to start cutting. I think Euro will probably see a rate cut also happen the next 2 weeks. So more of that to continue, especially with the flows out of the US. And it looks like that's going to be the name of the game so far. The good part about everything today is the utilities and the defense have actually been outperforming. Meralco, Manila Water, surprisingly still hitting new highs. Your REITs actually performing very well also, despite everything that happened. So it looks like same story, search for yield, buying protection, getting paid to wait. I think that's still the main investment thesis the last 3 years. Till today, that still remains the same case. Okay, I think that's pretty much it for today's Gap&Go. I know we talked a lot about, but I guess to sum everything, it's really the East versus the West. And while West is trying to make their country great again by punishing everybody for taking advantage of them, as from what they call it, I think the real goal really of the US is slow down the economy, bring interest rates down, refinance, and then we'll start bringing back to growth again after you build the factories there, especially on those 3-4 sectors that we talked about a while ago. And then the rest of the world, especially in China, trying to make friends again with everybody, saying to everybody, hey, I'm your friend. If you need help, we're here. We'll just deal directly. We'll exclude the US, which has actually been a both positioning emerging market in a better position economically. Now, again, we talked about whether it will decouple. I don't know, but you'll probably see many countries start rate cutting and should actually be more beneficial, especially as commodities and import costs for some of these things have gone down. So with that being said, be patient. I think this is a year of volatility. Maybe the extreme worst case scenario is done, but we're still suffering from so much volatility and looks like we still need more time to digest everything. Hopefully we'll see better signals happen on the bond market. Although it's just been a week post the excitement and all the scares that's happening. Maybe when we see more clarity and when volatility starts coming down with regards to the bond market, we'll have a better idea on how positioning on the equity market should be. All right. So with that being said, happy Holy Week, guys. Take a break, probably much needed for everybody. And I'll see you guys in a few weeks' time. All right, guys. Thank you. Have a good day.
Thank you.
Thank you.